So new traders are always asking me, should I be a day trader where I'm in and out of the market in one day, or should I be a swing trader where I'm holding a position for longer than a day, maybe a few days or a few weeks? Okay, it all depends on your current lifestyle and these three factors of the market. Let's talk about it here. Roll the intro. All right, traders, what's going on, guys? Welcome to Trader Tips. It's your head trader, Cleveland Bishop, here with the top traders. Hope you guys are having an awesome Tuesday. US session literally just started. It is 9:30. All right, and I have some pretty cool news for you guys here on the channel. All right, so guys, if you guys are new to the channel, welcome. All right, make sure you guys are subscribed. Okay, and if you guys like the video for your boy. I appreciate it. All right, so I have a pretty cool subject that I want to talk to you guys about today, which is day trading or swing trading. All right, but I want to kick some things off real quick, which I think pertains to this video segment with what is actually happening in the market right now. All right, so I want to roll a quick snippet. This was an intraday position that I called out yesterday where we thought we would see a breakout, and I want to show you guys what we thought was going to happen and where we are right now. Here, take a look. If you want to play that from an intraday perspective, you'll be looking to play those breakouts during the London session or during that early US session, right? So right now we're somewhat getting a little breakout at the moment from the $1.16s. US session just kind of started to kick off maybe about an hour or so ago. It just all depends on where you're trying to ride that move. You know, usually when you're trading a breakout strategy. So at that point in time, markets were trading at 16.38, all right, $16.38. Well, before I show you guys where we're at, I want to show you guys now another video that I posted literally just 4 or 5 hours ago of another opportunity to get in on a momentum breakout on the Euro USD. Okay, take a look at this. You know, and if you don't want to take the risk of waiting for a pullback, then you do what we mentioned yesterday and you just trade really, really small and you move stops as quick as possible. Remember, it's a momentous breakout play. This goes right back to the strategy that we use inside of the course, where we're just trading simple flag breakouts as the momentum comes into the marketplace. Okay, so far. All right, folks, so here you guys go. Here's a quick screenshot on both of those flag breakouts that we saw over the past 48 hours or so on this Euro USD. This was a momentum breakout. Flag breakouts are our bread and butter. It's one of the main things we talk about in our entire course, and we were actually able to execute on both of these moves. The one that happened earlier this morning, as you guys saw, markets already somewhat broke out, so it was kind of like, okay, well, do you want to start executing? Because if you want to get in this market, you have to put in a market order. Your limit order by now would have obviously been triggered, okay? But right now, markets are up 0.4% on the Euro USD. We still see this US dollar sliding a bit. So that was an example, I guess, of intraday positions. Both of those positions really didn't last for too long. You can't stick them out, and some folks are probably still in that first flag breakout that we saw yesterday, and obviously some folks just got triggered this morning in this new flag break. But again, you can really be out of those positions. Both of those positions should have already hit your risk reward parameters. But if you're a swing trader, you obviously potentially wouldn't even have been in those trades because there potentially wasn't even a signal. All right, the signal was way back down onto the $1.16, so you probably would have thought you were late if you got in at the $16.30s. Okay, so all this depends on if you're getting in and out of the market and where your entries are and what your overall edge is. All this depends on, folks, if you're day trading or swing trading. And it's extremely important when you're starting off in a business to categorize yourself as one or the other. Do not do both. I guess that's one of the first tips that I'll bring to you guys, because once you start doing both, you're participating with completely two different market participants. It's better to be a cardiologist, okay? Don't be the general practitioner in Forex, the person that does everything. That person makes no money. Okay, be the cardiologist, be the neurosurgeon of your strategy. All right, be really, really good at one thing, whether it's day trading or swing trading. All right, but one of the first things I want to talk to you guys about in regards to these three factors is lifestyle. All right, your current lifestyle is going to dictate whether you can day trade or whether you can swing trade, right? So for example, a normal day trader is usually going to have to spend a few hours a day actually staring at the charts. And when you're participating in the FX market, everyone talks about that London breakout that happens at 3 a.m. Eastern time. Well, again, if you're in the US, then of course you're going to have to acclimate your lifestyle around trading momentum, around when market participants are actually participating, right? And if not, if 3 a.m. is a little too early for you or a little too late, if it's 12 o'clock and you're on the West Coast, you're going to have to start participating around that 9:30 time, which is going to be usually when these U.S. markets start opening up. Now, the futures market and the FX market in the U.S. Starts to open up really around 8 o'clock, and that's also during a cross section of when the Euro market is somewhat going to lunch and when that U.S. market is beginning. So you do start to get a little stir of volatility around that 6 o'clock to 8 o'clock number. I talk about this in my best time to trade video. I'll put a link down below so you guys can check that out. But as a day trader, remember, you're day trading. You're in and out of markets within that day, which means you're going to have to be sitting at your terminal all day long. You're going to have to be there for 3, 4, maybe even 5 hours throughout the entire session, depending on when, you start your trading regime. All right. So again, you never know when markets are going to start showing you volatility. You could be sitting down for your 3 a.m. London breakout, but you may not see any breakouts until 6 o'clock. Markets may not start to show you volatility until hours and hours and hours into the session. And if you get up and you leave, then guess what? You probably missed out on a few trading opportunities. So I think as a day trader, it's really important for you to actually sit there and actually be involved in the market with all the other market participants in the entire world. And otherwise, if you can't, well, you're trading really at a disadvantage because you have some guys that are able to sit there and be fully all the way in on the business. You not being able to do so is going to, again, put you at a massive disadvantage, probably not allowing you to be as profitable as you should be. So again, the whole day trading versus swing trading argument pertains to lifestyle. You have a 9 to 5, if you work late nights or something like that, you have a full-time job, kids, all these different things, you probably shouldn't be day trading. Okay, I usually start to pivot, folks that are still trying to get out of the workforce into swing trading because swing trading is a little different. All right. Swing trading, you're holding positions for a few days or so. You're 24 hours plus. Okay. Really 24 hours up to 2 weeks at times. Okay. So the good thing about swing trading is you can assess markets in the morning. Markets are going to take so much longer to acclimate to your profit targets. You're going to have further reaching targets because as a swing trader, your targets are just larger. We're going to talk about that in a second. Right. But this gives you the chance to assess markets, get up and go about your day and really kind of maybe check things up on your phone. I don't ever suggest you trade from your phone, but you can check where markets are currently on your actual phone, right? So that's what I like about swing trading, okay? Think of swing trading like investing, real quick, just micro investing. Think about, let's say we're in Apple, okay? If we're in Apple and we're looking to trade Apple or sit in Apple stock for the next 6 or 9 months, you're not going to really have a designated time that you're checking Apple stock for hours throughout the day because your targets are so far away. You're going to be checking up on Apple maybe every other day or so. You don't have to check up on it every day. Well, that's the same thing with swing trading, except on a more micro level. As a swing trader, if you're holding position and if you know your average position holding time is for 2, 3, or 4 days, well, you really don't have a designated time that you should sit and be staring at markets like a day trader, right? Day traders are literally looking at breakouts on 5-minute charts, 15-minute charts, on the high end, maybe 30-minute charts. Hourly charts, you're really going to be sitting there for probably 4, 5, or 6 hours minimum. Okay, so day traders are usually looking at these really low time frames. They have to be seeing what market formations are actually happening and taking those actively throughout the session. Swing traders, it's not going to happen like that. You're looking at the 4 hour on minimum. Okay, on the high end, you could be looking at the daily. You could be monitoring that weekly time frame. You don't have to be sitting there all day. Okay, so if you live a lifestyle where you have a full-time job, a bunch of kids, you have a lot of stuff going on, I definitely suggest swing trading. All right. But if somehow you have all these hours in the day and your schedule is conducive to day trading, definitely I would probably suggest maybe you start, looking into it if that's what you favor. But generally speaking, overall, just getting into trading, I always suggest swing trading because things move a little bit slower. Okay, markets allow things to play out. You don't go and start having all the horrible habits that a lot of day traders have that I probably want to talk about in a later video. So make sure you're subscribed because I want to talk about some of the deadly habits of day trading. But swing trading lets you take your time and lets you assess markets for a little bit longer and make you make better decisions. Okay. So that's number one, lifestyle. Do you have the time for it? Do you have the personality for it? All right. That's the most important thing that I think should be the framework. Now, after that, there's a common question of, well, where can I make more money? I want to day trade because I can make more money day trading than I can swing trading. Totally not true. Okay, let's look at it this way. Let's say your average day trader is in and out of the market maybe three or four times a day. Let's say they take 3 positions a day, and 3 times 5 trading days is 15. Let's say they don't trade on Fridays, so boom, you have 12 trades on any given week. And this is low balling, right? I know some day traders that are animals that are trading 10 positions a day, right? But let's say you trade 12 positions on any given week. 12 times 4 is 48. All right, so now you have 48 positions on any given month. Okay, now if you're taking 1% trades on every single one of those 48 positions, you just gave your portfolio a potential 48% drawdown, right? Let's say you lose every single one of those trades, 48% of your portfolio could go to the shitter, right? And that's not good. That's what you don't want to see. Or let's just think about it in a weekly perspective. Let's say you have a horrible week. You don't want to have a 12% loss in your portfolio in one given week, right? So usually when you're day trading, you're having a smaller position per trade because you have a higher execution frequency, right? Execution frequency is when the amount of times your edge appears in the marketplace, right? So if you're trading within your edge, there's only a certain amount of times that you have an opportunity to profit, okay? And if you have a multitude of different opportunities to profit all day long, then you probably need to be tailoring your risk down on any one single position to where you actually give yourself a chance to not have too large of a drawdown, because we know that potentially you might have some true positives appear in the market. That basically is your indication of get inside of a position, but those true positives could turn out to be false positives where you thought this was going to be a flag breakout and markets break out, but then they just pull back right back down into structure. That happens all the time on the 5 minute, on the 1 minute, and even sometimes on that 30 minute. Okay, so as a day trader, you need to be having less risk per trade. And that being said, since you have less risk per trade, it's going to turn out to be really around the same amount of profit potential you see as a swing trader. Because now let's give the swing trader example. Let's say you're a swing trader and you're executing in maybe on any given week, you have 2 or 3 trades per week, right? That's fairly common for any one swing trader. Well, let's say you're at 3 trades per week, 3 times 4, you're at 12 trades on any given month. All right, swing traders usually are risking 1 to 2, maybe sometimes if they really love the position and if it shows them what they want to see, 3% per trade. Let's average it out at 2. That's around a 20% drawdown on any given month, which is somewhat acceptable. It's not horrible. All right, usually you want to be probably between 10% and 20%, but that's about right. So as a swing trader, obviously you guys can see, since you have a lower execution frequency, you have to make those trades worthwhile and you have to put more size on those positions. Okay, so it actually will turn out to be around the same, because let's go back to the day trading example. Let's say you're risking 0.5% per position. That puts you back in that 20% mark from a drawdown perspective, because remember we had us executing 48 trades. Okay, so 20%, 20%. That gives us the same amount of profit potential. That gives us the same amount of drawdown potential. So no, it is not true that day traders can make more money than swing traders. It's really all about the professionalism and the money management style that you're actually using at that given time. So if you're compounding, that gives you a better chance to probably make more money than any other swing trader or any other day trader, period. Okay, so that's just one myth I wanted to crush real quick. All right, that brings me on to point number 3, guys, which is strategy. Okay, so earlier I mentioned that we are trading momentum breakouts, and that was our day trading strategy that we were using in the room. Top Trader Alerts, you guys can get access to that in the bio down below. We were trading that strategy intraday. Okay, and that's because as a day trader, momentum breakouts are probably one of the best strategies to trade. Okay, because on any given day, you have these bursts and breakouts of structure. Again, that's why the London breakout at 3 a.m. is such a popular strategy, because what you're doing is you're hoping for that a massive amount of sentiment and market participation to come in and hit the market at one time in one single direction. You're trailing stops pretty quickly. You're probably taking some size off as market goes along, maybe keeping some on until markets pull back, and boom, you're out of the trade. And you're doing that all day. Okay, so that's exactly what we did on that Euro USD. Markets came up and hit off right at that $16.30 area, $16.40. We saw a breakout happen, boom, got triggered into the move. Markets came back up, markets continued up into structure, but they didn't quite pull back, and that's a good sign, right? That's momentum for you. We ended up getting another breakout this morning, okay? So that's why playing momentum is so cool as a day trader, because literally you're just taking these rips in the marketplace. You're moving stops pretty quickly. Managing positions from this perspective is extremely important, because these markets can turn around against you, and there is no, all right, taking on the trade and just hoping it rides out and having some type of strange conviction that the market's going to work out for you as a day trader. All right, you're in and out of so many positions. You should be the last person to care about losing a trade, because again, hopefully you're able to get break even instead of having the full loss hit. Okay, so again, as a day trader, I like to prefer momentum breakouts. And moving over to swing trading, I like mean reversion. All right, mean reversion is a great strategy that basically implies markets are at their extremes and they're about to pull back down into structure. Okay, market, it's the whole rubber band theory, the reflexivity theory by George Soros. It's a lot of knowledge and information behind it that you guys can study up on. But as a swing trader, that's what I love. I love to see, hey, markets are at extremes. They've been holding this high for a few days now. I'm thinking that eventually markets are going to start to pull back down into structure. And we have swing traders that are looking at the Euro USD right now in that same context. So that's what I talked about on the Monday market breakdown just yesterday. That idea of markets are currently at an extreme and we are hoping to see them pull back up into structure. So as a day trader, we wanted to buy the Euro USD, and as a swing trader, we wanted to buy the Euro USD. Okay, that's a very important component as well there, folks. Those higher time frames, if you're a day trader, you need to be assessing markets on those higher time frames so that way you're not caught up, in some short-term momentum in the opposite direction than what that higher time frame is showing you. Okay, so mean reversion is great for swing trading. It allows markets to play out. Stops need to be a little bit larger because you don't know when that extreme is actually going to come. Right? So markets need to play themselves out a bit. You have to be able to take on a little bit more stress, but you usually will have a larger profit target and earn more pips in that actual trade itself. Okay, guys. So look, those are the three elements there. I've been talking a lot. Hope you guys have been paying attention and no one left out. All right. And we talk about this stuff a lot inside of the Top Trader Pro course. So you guys can get access to that down in the link in the bio. Let me know what you guys do. Are you day trading? Are you swing trading? Why do you like day trading? What are your troubles with swing trading or whatever it is? All right. Talk to me about this subject. I'm really interested to see. Okay. So guys, look, if you guys need anything, let me know. This Euro USD again is still looking good. We're at 0.35 on the day. It got a high at 0.41. So we'll see what happens in that regard. We'll be talking about that again in the community below. I'll talk to you guys real soon. Okay, I'll see you later on this week. We'll do a recap of what happened. Okay, talk to you guys soon.